Good afternoon, everyone.
Hi, folks.
Doing today. Welcome to our kind of level up webinar series. We do this monthly for Razor's Edge and Financial Edge customers. And we highlighted fit on our last Financial Edge webinar. So Jeff and I decided that we wanted to do just a demo on the fund investment tool for you all today. We're going to have a small crowd today. Right now, it's just two people attending. We only had 8 people registered, which is absolutely fine. And so because of that, we would love to invite you guys to come off mic, or I guess on mic, and go off mute and share your video if you'd like as well. And as we get a couple more people coming in to join us today. Good afternoon, Lauren and Stephen. I was just telling Mark and Lori that we're going to have a small crowd today. So we invite you all you can stay on camera if you'd like. You can come off mute if you'd like. This is going to be a guided demonstration of the fund investment tool. But the good thing about having a smaller crowd is that we can kind of stop and ask questions. So this isn't just Jeff and I presenting to you all. It can be a conversation as well, so that we make sure that you guys are seeing everything that you need to see and that you want to see with our fund investment tool. So feel free. There's a chat and a Q&A available as well. So as you're saying things that if you don't want to come off mic and you just want to put them in the chat or the Q&A, feel free to do that as well. For whatever reason, we've had some organizations that will block chat but not block Q&A. So if you can't go in chat, make sure you go in Q&A. We'll keep an eye on everything as we proceed through our presentation today. So welcome to our fund investment tool demo. Here's what we're going to kind of go over today. We'll start off with introductions from our side, and we would love to hear where you're from, organization, location in the country, or in the world as well. I saw we had someone register from Canada. So we'd love to get an introduction from you all in the chat. We'll kind of go over the backstory of the fund investment tool and then jump right into the demo. So, Jeff, I'd love to turn it over to you for an introduction to begin with.
Sure. Thank you, sir. Good afternoon, folks. I'm Jeff Armstrong, Chief Innovation Officer here at NPact. I've been with the organization for just over 20 years now. Started out as a software engineer, managed engineers and managed products for quite a while. And now in this current role, I am assisting with sales, assisting with implementations of the FIT tool, and also assisting the engineers as they build out new functions and features there too. So excited to meet you all and to show you the tool as it is today.
Thanks, Jeff. And you've been here for 20 years. That picture may have been in the first half of your employment here.
That was actually about 3 years ago, but yeah, my hair is quite a bit longer. I need a new headshot.
Yeah. Good afternoon, everyone. My name is Kevin Wood. I'm the Director of Sales at NPact. I spent 15 years in the nonprofit world as a database manager. I worked at a healthcare foundation. I worked at a university, and then I worked at a high school here in Cincinnati. I joined NPact just over 3 years ago as a Razor's Edge consultant, and I spent a little time doing that. I managed our consulting team for a little while, and I just took over this new sales role here this year. So part of that role is helping sell the fund investment tool, which is why I'm here today, and I also sell a lot of our consulting work as well. So just some housekeeping. We are recording the session in the chat, in the Q&A, and the poll questions. So I will compile all that stuff, the slide deck as well, and send that out to you probably tomorrow. We'll send out the recording and the slide deck. And like I said, as you guys were entering, we invite you to go off mic. If you have a question that you'd like to vocalize, please go off mute and do that. And also, again, put in the chat or the Q&A. So I'm going to launch a poll question here, and I would love to hear how you all are currently managing your endowment fund calculations. So you'll see that poll question pop up here in a sec.
There it is.
Yeah.
I won't answer, Kevin.
Thank you. We may have at least one current customer in here as well. So another product could be the fund investment tool.
There you go.
Yeah. So yeah, we have at least one person that highlighted Excel as being where you currently do your calculations. And as we're doing these demos and we're talking to folks, different organizations, we're finding our biggest competitor is Microsoft Excel. So as you'll see through our time together today, that one of the primary goals for the fund investment tool is to take away those manual calculations that you're doing in Excel. We see a lot of fat finger errors when we do that. We also see auditors come back and say that, hey, you have to have an audit trail, as you're doing these calculations. And so fund investment tool will kind of take care of both of those things. Jeff, could you give us some history of the genesis of FIT, please?
Yeah, you bet. You know what I should have done? I should have gone back and looked and seen when we started doing this. So I want to say it was 10 years ago. Blackbaud, Financial Edge 7 was the Blackbaud Windows version of Financial Edge, their database view that we still have some access to today. That was an on-premise solution for the most part. And so folks were installing that on their own servers. And an optional add-on to that FE7 implementation was Blackbaud's product they called Endowment Manager. And so Endowment Manager helped foundations who manage funds do those monthly processes for investment pool income distribution, for administrative fees, for annual spending policies, fund level asset rebalancing. And so it was, again, integrated with FE7 on premise. When Blackbaud made the decision to put FE Financial Edge NXT in the cloud, they took a look at those products and realized they just didn't have a path forward to put that endowment manager product on the web. They didn't want to commit resources to it. At the time, the NPact was known as Fusion Labs. We had a great relationship with Blackbaud, a lot of shared customers, still do. And they approached us and said, would you guys be interested in building Endowment Manager NXT, using the Blackbaud technology, using Sky API, but hosting it on your own servers? And we said yes. And so we built, in fact, the first versions of our FIT tool were called EM NXT, Endowment Manager NXT. And so our first versions came out 8 years or so ago. We've got, that's essentially how it started. They asked us to do it, and it was an interesting partnership between Blackbaud and Fusion Labs. Normally they wouldn't, give folks permission to do things like this with their intellectual property, but they didn't want to build it themselves. And it was an obstacle for a lot of foundations who had that on-premise solution and weren't willing to go to NXT without endowment management. So that's why we built it, and when we built it in-house. So that's still the vision, is that we want to enable foundations to do those fund accounting calculations and all the processing that needs to go. If the finance system doesn't have the integrated solution to meet those needs, then that's still the vision for our product, that we want to do that through our cloud environment, and help folks manage their funds.
Perfect. Thank you very much. And now I'm going to stop sharing because now we are into the Jeff Armstrong Show.
All right. I will share my screen here real quickly. Should be seeing this now. Can y'all see my browser with the fund investment tool on it? All right, so for those of you who haven't seen it, this is our fund investment tool. I'm in a sandbox environment right now, sitting in our production server. But like we mentioned, out of the box, we handle 4 different calculation types, and we'll spend some time looking at each one of those. But architecturally speaking, Financial Edge NXT lives in Blackbaud's cloud servers. Oracle NetSuite lives in Oracle's cloud servers. Tool lives on our own cloud servers. We can't, install this on their servers. We have to have it on ours. And so we have a full copy of the Financial Edge transaction data set in our FIT database, or perhaps in your grants database if you use our grant management solution. We keep those in sync with nightly syncs so that we've got all the transactions available to us to do the balance calculations here in FIT. And so for each of these 4 batch types, our users who use FIT will go in and set up batches for income allocation or fees, etc. They'll calculate balances, and then the last tab of it is a journal entry output tab that will allow you to send those journal entries straight to Financial Edge with a click of a button using Blackbaud Sky API, so that those transactions go into new journal entry batches. So big picture, that's sort of the architecture. I'll go ahead and show you what income allocation records look like, and hopefully that gives you sort of a good feel of how the product works overall. And I'll definitely come up for air for questions here in just a second. But this is our income allocation landing page. We've got some aggregate data here at the top, and then a list of all the batches that we've processed. And this is a significant difference between Blackbaud's allocation manager tool and our fit tool, is that in allocation manager, you can go in and do your income allocation. But when you come in to do the next one, you've essentially lost. It's like a calculator where you hit the clear button, right? You don't have that batch history to go back and see what did the batch for June look like. You can see the journal entries, but you can't see what your basis balances were, for example. So this allows us to go back and see all sorts of stuff in history. I'll pull up this first income allocation batch. If you're managing, say you're managing 8 different investment pools, you'll typically see 8 batches per month generated for each of those pools. So each of these record screens has the same look and feel for all 4 batch types. We've got a first tab here is a process tab where we've got some information about the batch, sort of a configuration screen where you set up the batch and then you can run the calculations. For this particular batch, we've got what's the effective period for this income pool that we're doing the income for, and it's the end of January 2024. What's the post date on the transactions we're going to send back to Financial Edge? And that's almost always the same date of the end of that same month, but there is flexibility to do that differently if you need to. And then which of our income pools, investment pools, are we doing this batch for? So this is going to be for our balanced pool for the end of January last year. And then our custodians told us that these 5 different income types were in these 5 amounts. And so we just put these in from that custodian report that was sent to us at the beginning of the month. And then we clicked calculate and it did the math. Typically what we see is 30 seconds to a minute to do the calculations, sometimes less, sometimes more, just depending on how big of a Financial Edge database you have, how big those transactions are. So once the calculations are finished, then the audit sheet shows you the results of the calculation. So we see 1 row per fund. For every fund, what was their market value, which we define as this balanced pool is associated with 1 GL asset account in Financial Edge. So what was the Morales Fund's balance in that balanced pool for January 2024? And this can be an ending balance. This can be an average daily balance. We've got one customer who actually has this set up as a 4-quarter rolling average. So however you want to calculate the market value in the pool for a given fund, we can do that. And we also have a couple of foundations who just don't want to see what's in that GL account. They just want to see the net assets to know how to evenly distribute amongst all their funds for a single pool. So based on this, if I hit my end button and jump all the way down, this whole batch, this is relevant to a $13 million pool. And of that $13 million, how much does this Morales Fund own? A very small percentage of it. And so therefore, those 5 amounts we put on the first screen, what share of the interest is this fund going to get? What share of the fees are they going to have to pay out, et cetera? And once all this is done, these numbers at the bottom add up to the total for all the funds, add up to the numbers that we put in on the first tab. And then once this is ready, if you see that you're missing a fund, or if you realize, oh, shoot, I forgot to post a couple of transactions in Financial Edge, then you can go back to FE and post some transactions or reconfigure some funds and resync, and then come back and calculate again. This process tab lets you hit that calculate button as many times as you need to, so long as it's still in a new or a calculated status. Once you're ready, you go to this last tab, this journal entries tab. In this environment, there are a lot of transactions, so this may take a second to load up here. But what we're going to see is we had 5 different types of income that we're going to be distributing to each fund. And so we'll see 5 pairs of debits and credits for each fund on this screen. And so the first ones will be relevant to that first fund we were looking at. And generally speaking, what we're doing is we are crediting revenue accounts, and then we're debiting asset accounts on the other side. So for this first fund, the balanced pool is represented by this 12100 account with this example chart of accounts, right? So 12100 is the balanced pool. We're going to be debiting for accrued interest for this fund. We're going to be debiting this $2.92. We're also going to do a credit into this revenue account, which is an accrued interest revenue account in the chart of accounts. And similarly for all 5 pairs here, we're hitting this balanced pool account on the debit side, and then on the credit side, we're hitting all the various revenue accounts. One exception is this one, this investment management fees. This is actually an expense account. And so we reverse the debits and credits on this one. We would do the same if a shared realized gain and loss account was used for a loss. If there was a loss for the quarter or for the month, then you would just enter in a negative number on that first screen and it would debit and credit appropriately to whatever account that is. Once these are ready, it's super easy. You just click a button and it sends these over to Financial Edge, a new journal entry batch. That new journal entry batch in FE initially has a status of open, and it's not posted, so it has to be manually reviewed, make sure it balances, approve it, and then post it manually in Financial Edge. Blackbaud and Oracle, neither one like us. They don't like us posting stuff from an API call. That needs to be done manually by a finance expert. So with good reason, I don't blame them. But that's sort of the overall process. Once you do this and you send the journal entries over to the finance system, the status of the batch changes to posted. The transactions in FE aren't technically posted, but from Fit's perspective, this batch is posted and it becomes read-only at that point. You can't recalculate it. You can't change any of those first few fields on the front screen. You can always export. That Excel download screen button will always be there available for you. But overall, that is, that's sort of a big picture perspective here on how the income allocation batches work. One more thing to note here is that if you've got a lot of data to enter for a bunch of different pools, income pools, you can do that via spreadsheet. So I'm going to go to a new batch template. I'm going to get a new batch template generated automatically, downloaded to my browser. And of course, on my other monitor, it will open up and drag this over. So this is what Fit generated for us. So for every pool, for each of the 5 available income types that we have configured based on this chart of accounts, for the end of April, we're going to be posting transactions on this date, and the amounts that we got from the custodian are here. So whatever the custodian sent, you can put into this format, copy and paste. As Kevin said, there's a lot of opportunity for human error if you're typing stuff in, but if you want to copy and paste from what your custodian sent, this is where you'd put it. Anything with the 0 is just going to get ignored, but once this is all ready to go, you can come back to this screen and just import the batch spreadsheet. This will programmatically just create 5 batches for you, and you'll be in good shape to start those calculations and review and get it ready to go. So like Kevin said, this gets rid of the manual processes that you've got to do in Excel. Compared to the way things are done in Allocation Manager and FE, this gives you a batch history where you can see not only actions that went over, which you can see from the journal entry batches, but what were the basis values and which funds got 0 allocated that you want to see that, because those didn't go over to FE, right? I am going to take a second here to come up for air and see if we've got any questions on income allocation. The other 4 calculation types work almost exactly the same way. The screens look very similar. And so we'll jump into some configuration stuff here in just a moment. But I don't see anything in Q&A, Kevin. And I don't see anything new in the chat section either. So
yeah,
feel free to type your questions, folks. Or if you'd like, you can come off mic and ask them live if you want.
Yeah. No news is good news in the webinar world, Jeff.
I think so.
Yeah.
All right. Well, I will go ahead and switch gears here then. Before we jump into fees, I want to show you how we've configured things in the control panel. So I'm going to go to our config menu. We were just doing income allocation. And you'll note, if you recall, there were 5 different income types. We defined these here in Fit and associated them with accounts in the chart of accounts in the Financial Edge database to which we're linked, right? So we've got, you'll notice this one is a debit, and these are all credits. The other side of those transactions, of course, you saw in the batch. The other side was the asset account for the pool itself. And so we'll set these up during implementation. So if you decide to go with Fit and buy licensing for this product, we have an implementation process where we'll set it up. We'll bring in a set of your Financial Edge transactions from Blackbaud. We'll bring in your funds from Blackbaud from an FE database backup. And then based on what you tell us you're going to need set up for your income types, we'll go ahead and set these up for you and get some recent batches created for all 4 types to make sure you can compare those numbers against whatever you've got for your legacy process to make sure they're looking good. This is where we set up income allocation. And then we've also set up the pools over here as well. So this is our list of. It uses the term pool a bit too loosely, in my opinion. A pool is not necessarily an investment pool. A pool, for our purposes, is just a group of accounts for processing. So we have 5 investment pools set up in this tenant, in this sandbox here. We've also got a couple of pools in air quotes for fees and for spending policies. If you want to process all your fees in one group, or split it into multiple groups, then you can set those up as pools, and then same for spending policies. You can have as many of these as you need to. We think it's great and simple to have just one fee group and just one spending policy group if your processes are that simple. But if they're not, then we can handle that as well. Let's talk fee schedules. And again, folks, interrupt me if you've got questions. For fee schedules, FIT handles a concept that we call fee families. Some of you may be familiar with this, some of you may not, but if a foundation is using a tiered fee schedule, then if I've got 3 funds with the foundation, you guys might do me a huge favor and just group all my funds together for fee assessment. And so if I've got 3 different funds that are in this Armstrong family funds, then we'd add up those 3 balances if they were in the same family. We would assess that tiered fee schedule against the total balance. And so that way I only hit the top tier that hit once, the 1.5% or whatever that higher percent is. I only get that hit one time. And then whatever the final fee amount is, we split that amongst my 3 funds, pro rata based on the balance. So if you want to do fee family processing, we can handle that. It can be configured here, but it's typically configured in a Financial Edge or in a finance system fund record with an attribute or a custom field there. We'll talk through that in a second. But we do fee families, and we can have as many fee schedules as you need. Also, we see a lot of community foundations that have, dozens of fee schedules, that a bunch of them that are no longer used, but they're kind of grandfathered for a couple of folks. And so we can handle lots of fee schedules. Pull up a more complex one here to show you kind of what the capabilities are here. But for this fee schedule, this is a tiered fee schedule. And so if I've got an $8 million fund, the first $1 million is going to be assessed 1.5 basis points here for the percentage. The next couple million, I'm only going to be assessed 1%. And then anything above 3 million, in my fund, I'll be assessed this or whatever. So a tiered fee schedule here, these all get added together at the very end. You'll notice there's a minimum here. This is an annual minimum. And since this fee schedule is configured to be run monthly, then it would be every month, if we were doing fees, we would assess a 1/12 of this as the minimum fee. So that's what, $17, give or take. $16 or $17 would be that minimum fee that we'd assess per fund per month. You can set these up for monthly, quarterly. Let's see, what are the options? Monthly, annually, and quarterly are the options there for the fee frequency. We've got the account numbers that we're going to use for credit and debit for the output. And then what's the balance type going to be? Is it going to be an average daily balance for the month? Will it be an 8 quartered, whatever, all these quarterly averages, rolling quarter averages, an ending balance? This is just a proof of concept to show you we could do a custom balance if you need. We had one foundation asked us to have the fee schedule be 2.2% plus whatever inflation was for the year. So it's CPI based, and they've got to go in and manage that. And so we've got a lot of flexibility on how we calculate these balances too. And then, again, the nice thing about this is no matter how many fee schedules we have, we can process all the fees in one batch. So for a real simple implementation, a foundation might just have one group here, right? Here's an example of what a fee batch would look like for January of 2024. This one fee group, the master fee group. And the output here, again, 1 row per fund, but we can see which fee schedule they're associated with. What was their ending balance at the end of January? And then what's the basis that we're going to be using to do the calculation? These are slightly different because this one's going to be based on an average daily balance. And so that average daily balance was 50,000. When we apply the tiered fee schedule and divide by 12, because this one's monthly, then this is what we get for this month's fee. And then after the fact, we go in and we calculate the rate because this is essentially an effective rate. This one had a real high balance, and so it crossed into multiple tiers on that tiered fee schedule. So it got 1.5%, and then some of it was only 1%, et cetera. So this was the total effective fee rate across, all those tiers for this one fund. Again, you can recalculate as many times as you need to until you send, and the last tab is what we send to Financial Edge. This is usually a lot simpler than what we saw in the income allocation batch. This is just going to be a pair of debits and credits per fund. And so for this fund, we're going to be debiting this expense account for fees, and we'll be crediting one of their assets. And so this whole list of debits and credits, 1,600 transactions, we'll send over to Blackbaud just with the click of a button. Same story as before. We have some foundations who, in their fee schedule journal entries that we send over, they'll say, okay, this was a grand total of whatever, $20,000, $50,000 worth of fees. We need a couple extra transactions to essentially record that money as, coming back to the foundation from these funds. And so we'll total up all the amounts and do what I call roll-up transactions, not a financial term at all, but if you need to take the totals and just say, okay, now we need to do not an expense, but we need to do a revenue transaction for the foundation using some kind of foundation control fund, we can definitely do those as well in these fee batches. So these are fees. Any questions on fees? Check in chat again in QA. Mark Bailey asks, Jeff, will you review how FIT and NPact calculate the average daily balance for calculation purposes? Yeah, great question, Mark. So average daily balance, for the most part, what we're doing is a monthly average daily balance. And so for these, let's see, for calculation purposes, we essentially take the balance on the first of the month and the second of the month and the third of the month, all the way through the last day of the month, and average them up. If there are any zeros, they get ignored. If there's negative, it gets ignored, but all the positive numbers get averaged in. It's different with every batch type, just depending on the balance that we need to calculate. Generally speaking, admin fees and spending policies are going to be based on a net asset balance, and those are going to use all the transactions that are in all of your 1,000 and 2,000 accounts, right? All of your asset accounts and your liabilities. That's the default functionality. We can change that, but that's how we get those balances for admin fees and spending policies. So in those scenarios, it would be, this was January 2024. So to get this, we got the January 1st, 2024 balance in all assets minus all liabilities. And then the same balance for January 2nd, January 3rd, et cetera, through January 31, and then average those up. If the fund was opened in the middle of the month, then we would just start with, January 13th or whenever it was opened, and ignore all the numbers before it. For income allocation, again, by default there, we're going to use whatever the GL account is for the pool, for the asset account there for the pool. In our example, it was 12100 for that balanced pool. And again, the way we do that, we get that balance for every single day and average the positive ones. But it's a different set of accounts. And then it's not relevant for rebalancing. We don't do ADB. Rebalancing is just ending balances. We'll get to that in a minute here, but did that answer your question, Mark?
Yes. Thank you, Jeff.
Good deal. You bet.
Forgot to come off mic there for a moment.
No problem. Good to hear your voice, sir.
Yes.
I'm going to jump over to spending policy real quick. Actually, I'll show you the config screen for spending policies. The way you set up spending policies is very similar to the way you set up fee schedules. And again, we do this for you during that implementation process. But the options here for setting up a spending policy are, for each spending policy, what's the balance type that we're going to use? Again, the same out-of-the-box balance types. We've got more than this out of the box today. I need to update this environment, Kevin. But we've got activity balances for, gift-based fees or grant-based fees, et cetera. We've got more options than this, but you choose your balance type. You choose the rate that you're going to use, and then the frequency. This is almost always going to be annual. You can set minimums and maximums, and then you set the account numbers that you want to use for debits and credits. Some foundations need 2 pairs of debits and credits because of the way their financial ledger is set up. And so if you need that, you can also set up a second pair of account numbers for debits and credits. Each fund can be assigned to only one spending policy. You can have a fund assigned to multiple fee schedules, but just one per spending policy. And the output here is somewhat similar. We've got all of them together in one group, one pool, regardless of what their assigned fee spending policy is. What's the effective date? What's the post date for the spending policy? These usually take a little bit longer to calculate because those 12-quarter rolling averages take a bit longer. But generally speaking, it's still within the 1 or 2 minute mark for those calculations. Again, here the results, one row per fund. We can see for every fund what spending policy are they assigned, what's their ending balance as of this effective date. And again, this is typically a net asset balance, all the assets minus all the liabilities. What's that basis balance? And this will be that 12-quarter, 16-quarter average. And then 5% of that is here. We go ahead and put a few of the quarters at the end for these quarterly ones. These are the 4 most recent quarters, and it's just for a sanity check. Does this 12-quarter, 16-quarter rolling average even make sense? And yeah, for this one it does. These were the most recent quarters. 5% of this is just this much that the fund is going to get, and these will be the post dates and effective dates. So for journal entries that we're going to send back to the finance system, this one is a bit of a tricky one. It's whatever account numbers you want to debit and credit, and we just set those up. So we have some foundations who say, just do the math for me and tell me what the distributions are going to be on this audit sheet, but don't send any transactions over to my FE and touch my chart of accounts. I just want to know how much Morales has to grant out for the year, or how much we've got available to take as a distribution from Morales. If it's not a grant making fund, if it's an operational endowment or something like that, how much do we have to draw down? But don't do anything with it. Just let me export this and do my work with it. We can do that as well. Journal entries, though, are relatively important if you're using Financial Edge to track an available to spend balance. And so some of our customers who are using our Foundation Cloud product need to see on a fund-by-fund basis what is the fund asset balance, but also what is the available to grant balance, for every fund. You can have an endowment whose corpus is locked, who you can't spend out except whatever's in the spending policy. And so if you have $1 million fund at 5%, you might get $50,000 to grant out for the year. And so that $50,000 transaction could go over into Financial Edge into a new non-closing account, maybe somewhere up in the 7,000 or 9,000 range. We do see that a lot with our community foundation customers anyway, who need to see that. And then we'll set up a calculation in Foundation Cloud to say, what does the Kathy Morales Fund have available today? And it would be that 50,000 minus whatever they've granted out already. So if you need those transactions sent over, we can send them over. Again, some folks are doing, within a given account, they'll use segments. If you're using Financial Edge, you can use a segment to say what's permanently restricted, what's unrestricted. And you may need to move money from a -2 to a -3 or something like that within the same account code, but just to a different dimension there in the finance system. And we can certainly do that as well.
Yeah.
At one point, I saw Lori's hand pop up.
I was just going to say, yeah.
And I don't see it there anymore. Do you have a question, Lori?
Yeah, I did have a question back on the tiered allocations. Do we need to add an attribute to the funds to identify which ones are tiered together?
Yes, definitely. So if we go back to the fee configuration, a couple of things here. If you are going to do fee families, then you would certainly do that with a custom field in your finance system. And then you would also want to have a custom field on those fund records to say which fee schedule does this fund use.
Okay, so we
I'm
have
jump over. Go ahead.
we do have the fee schedules indicated in the attributes on the fund. But would we need to, if they're going to be a fee family, would we need to add that as an additional attribute to the fund?
Definitely. I'm going to jump over to Financial Edge here. This is one of our sandboxes that belongs to NPact. I don't know if this is even the one that we're connecting to for this fit tenant. But in this environment, I can pull up a sample fund. Here's the Kier Family Fund. I know this one's set up relatively well. When we look at this project record, once it loads, we've got custom fields here. And these include some of the things that we like to see for fit. So we've got what's the fee schedule, and then there are all the options we've defined here for the various fee schedule options. What is the investment pool? This isn't necessary, but you can put it in here. If there's a single investment pool? We have some foundations who allow their fund holders to choose multiple pools. I want to be 60% in the balanced pool and 40% in the socially responsible pool or whatever. And so in those circumstances, it really doesn't make sense to do that with an attribute. But if you just have a single pool per fund, you can do that here. For spending policies, which spending policy is this fund going to use, if any? And we usually see, for our foundations who do this with spending policies, we usually see an option here that says, none or not applicable or something along those lines. But if we were doing fee families, we'd want to see a fee family one here. Do we have a fee family? Blackbaud doesn't alphabetize this list for us. I'll see a fee family attribute on this Financial Edge environment. But yes, we would, if we needed to implement fee families, we would need those added here as a custom field in Financial Edge.
Thank you.
Yeah, I'm glad you're thinking about that, Lori. A lot of times when folks go to, whenever we go to implement the FIT system for someone who's purchased FIT, one of the first things we'll do is take a look at their Financial Edge and, just do a bit of an evaluation and see, is your Financial Edge system in a place where FIT is going to work? We need to make sure you've got, things like this, attributes set up. Sometimes there are cases where a foundation will say, if I go back to one of these batches, sometimes the foundation will say the journal entries that we send to Financial Edge need to have account numbers with segments that are sort of dynamically generated based on maybe a fund type or something along those lines, right? All the endowed funds need to start with a 10, but all the DAFs need to start with a 20 or something along those lines. We can do that sort of customization if we have to, but we have to have a way to identify which funds use which segments. And so we'll need that set up in Financial Edge as well. And if it's data that's already there, heck, you can just use the fund type, or you can use, one of these other attributes up here, then we're in good shape. But we'll take a look at a Financial Edge database or at an Oracle NetSuite database and make sure that everything is set up properly for FIT to be plugged in. But good question. I'm glad you're thinking about that architecture early on. That's a good one.
Jeff, are those custom fields on the fund records part of the FIT implementation?
That is a good question. We typically do just a quick Financial Edge services engagement right at the beginning to make sure that all those things are set up. Sometimes a foundation will want to do this themselves. Sometimes a foundation will wish they could, but they don't have the time, and so they want to hire one of our consultants to do it. Or sometimes they don't know what they need, and so just having that a little bit of time with a Financial Edge consultant ahead of time to figure that out is what we typically see. During the implementation process, we will read that data in for sure. We typically send a workbook that says, please tell us how many fee schedules you have and what their rules are, and tell us what your spending policies are, how many investment pools do you have, and things like that to give us the details that we can use to set it up. But typically, making changes to a Financial Edge database isn't something that the FIT implementation team does. We expect that our FE folks would have worked with the existing customer implementation in FE to make sure that those are squared away. So, yeah, good question. Any other questions before we jump into rebalancing? Rebalancing is a whole different ball of wax.
Jeff, if we could shift gears for just a little bit for a second. I know you and I were chatting earlier about the use of FIT in Canada with different Canadian data hosting regulations that may or may not be in place. Can you talk a little bit about what that looks like for Canadian clients?
You bet. So across all of our products here at NPact, not just FIT, but we recognize that Canadian organizations cannot use systems that are based in the US and whose data lives in the US. And so they have to be running on Canadian servers. And so we have, we're working with Microsoft to host Azure servers in Canada for our data needs and for our application needs as well. So we have completely separate environments for our Canadian and for our domestic US customers. So we can get, a Canadian customer can use ours within, staying in legal regulation with their federal government. The other issue with Canada is that it is a different currency. The Canadian dollar is not the US dollar, right? And so whenever we connect to a FIT to a finance system, if it's FE NXT or if it's Oracle NetSuite in Canada, we will assume that if it's Canadian, we're just going to assume that everything in the FIT environment, all the transactions that we load, all the output that we send back to Financial Edge, that it's all Canadian dollars and not US dollars. The one sticky bit there that we may need to think through again is post dates, transaction dates. Canadian date format is month, day, year, and American is day, month, year. And so as we send those transactions over, they have to be sent over in a special format. And so we've got to have a locale setting on our side to make sure that we're sending those over in the proper format, because Blackbaud Sky API is locale aware, right? And so if we're sending data to an API call on a Canadian server, it knows that we're sending Canadian data. When you use Canadian date formats, we need to use Canadian dollars, et cetera. But we do support customers in Canada through separate servers that are integrated with Canadian cloud finance systems as well. Good question. All right, shall we talk rebalancing, Kevin?
Yes, please.
Yeah, I'm looking. I'm still not seeing any other questions. So rebalancing is often a confusing one here in the sales process. I think we may be changing the way we refer to rebalancing, but rebalancing is essentially asset rebalancing at the fund level, right? And so if I've got a fund that has money in pool A and in pool B and in a checking account and lots of different asset accounts, there are likely business reasons to consolidate that money into one or more predefined accounts by target. So in this environment, we've set up a couple of what we call rebalancing strategies. The most oftenly used one is something that we typically call cash rebalancing. And for cash rebalancing, we've got a bunch of strategy accounts here that we've set up. These are the investment pools that are in these accounts. We've got another account here that we've set up for a checking account. And this is what we often see for a lot of foundations and for a lot of higher ed as well. They'll have asset accounts where their invested money is, but when they make distributions or grants from a fund, that money will often come into, go out of a checking account. Whenever a gift comes into the fund, a lot of times it'll come into that same checking account or maybe a different money market account. And from time to time, the money that's in there or the deficits that are in there need to be zeroed out using money taken from or given to money that's in the pool accounts. And so we'll often set up a specific fund and pull up one of these fund records. For this fund, we can see rebalancing strategy. This fund has a cash rebalancing strategy. If we edit this, then essentially we can see the Riley Fund is 100% invested in the balanced pool. So they should have nothing invested in any of these other pools. And we're also targeting this checking account at 0. You can do multiple accounts here that you target at 0 as well. But essentially what this means is we expect that for this particular fund, all their money is going to be here in the balanced pool and there's going to be nothing in those. If we find money in a rebalancing batch, if we find that there is money in any of these other ones that are targeted to 0, whether positive or negative, we will move money around as needed to make it 100% into the balanced pool. So we'll pull up an example real quick of a rebalancing batch. I think this first one is cash rebalancing. Here we are. So for this account, let's see. And this is all effective a certain day, right? So this was as of Feb 16th of 2024. For this Paula Owens fund, they have a 100% target in the balanced pool and 0% targets on all the rest, but they currently have a negative 5,700 balance in their checking account. They probably made a distribution or perhaps a grant paid out from this fund. And now we need to move some money from this balanced pool to zero this out. So we'll debit here and we'll credit here. And then all the rest of these accounts for her we'll leave alone. The journal entries are a lot more simple than the ones on the other side. We're just going to, this 5,700, we're going to credit here and debit there just to move the money over. But that's the reasoning behind why we built this. We have a lot of foundations who do this. If you're doing an average daily balance for your income allocation, when a gift comes in, you don't want to wait 3 weeks to move that money from that checking account into their investment pool. They're going to want that money in there as soon as they can get it. so that they can have their pro rata share of the daily balance from the income items. So that's one use case that we see rebalancing used for. Really, anytime you've got asset accounts where you need to, set percentage targets, or even amount targets too, for that matter, and you need to keep funds in balance for whatever reason, this is a good way to do it. The other use case we often see is that if an annual spending policy is like a use it or lose it kind of policy, right? If you're not going to roll that balance to be able to be distributed or granted out next year, then you may want to take that money back from wherever you put it and reinvest it. And so essentially we could set up a strategy to be run once a year right before you do your spending policy allocations to say, the Kevin Wood Fund had $50 left over. They didn't grant out. Let's take that out and put it back into their investment. And then let's give them their 30,000 for the year after the fact in the spending policy calculation. So yeah, that's how rebalancing works. And there's a lot of flexibility there. We have a lot of foundations who run this, run it just monthly right before they do their income allocation. A couple of them run it weekly. And it's really ad hoc as often as you want to run this sort of thing. And coming up for air for questions again. Don't see any. Well, again, at a high level, that's essentially it. These are the 4 different types of calculations that we do. We walk through all the configuration screens. Lori, to your question earlier about custom fields in the finance system, I'll show you what we've done here in our mapping screens. We've got some custom tables in here. Here's a spending policy fund attributes, right? And so essentially, we've got 3 columns here. The name of the policy and fit, the name of the attribute and FE, and the value of the attribute and FE. So essentially what we're saying is any fund that has an FE attribute named spending policy set to this value of 16Q5, they're going to get put into this fit spending policy, right? So we're just mapping those out. And it's possible that an FE, maybe there's another value in here that says not applicable or manual or custom or none or something like that. And we just don't map those so that fit ignores them unless you handle those manually as needed. But we do this mapping that we set up. So we'll set up as many spending policies, as many fees, et cetera, as we need here. And then if we need to map attributes in fit, we certainly can do so. And we typically do that during implementation. I'm sorry?
Thank you.
You bet. Any other questions? We're often asked about reporting, and I'll mention that out of the box, we've got just a handful of reports here in FIT, and most of these just relate to the batches that you set up, batch history. There's an investment reconciliation report for reconciling your income allocation, your beginning balance, your ending balance with all your activity, et cetera. But for the most part, if you're wanting to see reports on, investment performance and things of that nature, those are typically better done in financial or in your finance system rather than in your FIT tool. This is essentially just designed to, report on the batches that we have here and the funds that we have here in FIT. If you need a custom report, we can definitely build a custom report and develop it for you during implementation.
Yeah, I'll add some of the beauty of the product is the fact that there isn't another system to learn another set of reporting tools. Is that because we're doing the work and integrating directly into your finance system, that the native reports in your finance system are going to be the ones that you're going to turn to.
Yeah. Was hoping these 2 reports would open up for me. I was going to show you a couple of our batch reports that I thought folks might find useful, but I wonder if we have an issue here in our sandbox environment. Need to get with the infrastructure folks. Oh, there we go. They're slowly coming online. I'll give these a second. One of these is relevant to rebalancing batches, and one of them is relevant to investment pools. while we're waiting on our server here. Any other questions? Nothing in Q&A. Nothing in chat.
Let me jump back over to. Is there anything else you wanted to touch on, Jeff, before we can kind of get to? I know we're running close to the end of our webinar today, so
we are.
Sure, be respectful of everyone's time.
Sure. The only other thing to add here is around users. We have an unlimited user license model, so if you've got 1 or 2 users, or if you've got 6 or 8 users, it's going to be all the same price. Most of our customers have 2 or 3 folks that are registered here in their user page. We've got one that's got 12 though, so it's entirely up to you guys, but we don't limit it by that. Well, we've got some issues with our reports, so sorry about that, folks. But yes, this was all I was going to show here, was just the user screen, Kevin.
Perfect. So I'm going to jump back over into our PowerPoint here. This will be most of the slides probably aren't. We didn't have a whole lot of information on it. This is the one we do like to include that I'll send out in the recording. We'll give you kind of a comparison of the functions and features available in the Fund Investment Tool versus the FE NXT Allocation Manager. So we'll give you some time to chew on that when I send it out. But this just gives you kind of that snapshot of what you're currently doing, and then what could be available for you in the FIT tool. Don't have any other questions. If something does come up, feel free to throw it in the chat. We've got 6.5 minutes left. So just wanted to highlight a couple of events that are coming up from NPact that we're presenting. Like I said earlier, we do a monthly webinar specifically for customers that use Razor's Edge, and one for customers that typically use Financial Edge. Our Financial Edge one next Wednesday is, I think, for both, because we're going to dive into integrating Razor's Edge and Financial Edge. So if you use both of those products, make sure you can scan this QR code. That'll take you to our event page. You can also click on this link once I send it out to register for that. But it's a free webinar. It's at 12 o'clock Eastern, so a couple hours earlier in the day. But that'll be good for folks that use both RE and FE. And then we have a Ask Us Anything for Razor's Edge users on the last Wednesday of the month. So obviously we're a technology company, but we're also a services provider as well. So we have a full team of both Razor's Edge and Financial Edge consultants that do wonders with any kind of issues that you may be having with the technology. I like to say we knock down the barriers between your technology and delivering your mission. So we do a lot of training, both on-site and remote, but we also do a lot of data cleanup projects as well. And then just kind of a la carte consulting hours that clients use us for as well. So you may have just a question on a report that you only run once a year, so you can grab 15 or 30 minutes with your consultant and kind of walk through that process. We can do a screen share, we can record it, and we're using real life, your production environment, so real life examples with your real life data. Now I have one poll question left here. Let me fire that back up. So if you liked what you saw today, I would love to get an idea of your interest. And there we go. Is it popping up? There we go. Love to get an idea of your interest in the product. Fair warning, if you select I'm ready to schedule a call today, I will be reaching out to you before the end of the week to get that call scheduled. But also, if it's maybe not something that you're ready for this fiscal year, maybe it's in the fall, or maybe it's even next year, make sure you answer that question as well, because I will put something on my calendar, reach out to you whenever the time is right. And we have our contact information here on the last slide. Feel free to reach out to either Jeff or myself about product-specific questions, or like I said, if you're ready to begin that sales process, I'd love to reach out to you and begin that conversation. Also, the Fund Investment Tool is an evolving product. So if you have functionality that you wanted to see that maybe you didn't see or Jeff didn't offer, we'd love to hear that as well, because we're always taking feedback on ways to enhance our products. So feel free to reach out to us in that regard as well. Look through the chat one more time. All right, we're good there. So we are right up against the hour. Thank you all very much for joining us. And we look forward to seeing you on a future NPact webinar. Jeff, thank you very much for the time today. Thank you all for attending, for the questions. And we look forward to speaking to you again soon.